What if I told you the biggest AI boom in history isn't being funded the way you think? Everyone is talking about billion-dollar AI investments. But almost nobody is asking the most important question. Where is all that money actually coming from? Because hidden behind the headlines is a financial system that's quietly creating trillions of dollars in obligations, many of them almost invisible. And if this system sounds familiar, it should. It's built on the same financial ideas that helped trigger the 2008 global financial crisis. So today, we're uncovering the hidden money behind AI and why the biggest technology revolution in history could also become one of its biggest financial risks. Every week, another headline appears. A new AI data center. Another record-breaking investment. Another company promising to spend tens of billions of dollars. The numbers have become so huge that most people barely react anymore. But here's something that should grab your attention. This year alone, big tech is expected to spend more than $700 billion building AI infrastructure. That's one of the largest technology investments humanity has ever seen. NVIDIA CEO Jensen Huang even called it the biggest infrastructure build-out in human history. But here's the question almost nobody is asking. How do you actually pay for something this expensive? Because even the richest companies on Earth don't have unlimited money. Eventually, the bill arrives. The answer begins with one shocking number: $1.65 trillion. According to one study, that's how much hidden financial obligation just 5 major tech companies have sitting outside their official balance sheets. Think about that for a second. Their hidden obligations are actually larger than the debt they openly report. Meta is one of the biggest examples. Its off-balance sheet obligations are estimated to be nearly 3 times larger than the debt investors normally see. So naturally, the question becomes, how can companies owe that much money without it appearing as debt? To understand that, we need to go back nearly 20 years. It's the summer of 2007, just months before the global financial crisis. At the Federal Reserve's annual conference in Jackson Hole, economist Paul McCulley stood in front of some of the world's most powerful financial leaders with a warning. He believed a second banking system had quietly grown in the shadows. A system where institutions borrowed money, lent money, created enormous amounts of leverage, but operated outside many of the rules traditional banks had to follow. He called it the shadow banking system. At the time, most people barely paid attention. Then, 2008 happened. And suddenly, everyone understood why hidden financial systems could become incredibly dangerous. But here's what's fascinating. The shadow banking system never disappeared. It simply evolved. And today, it's helping finance the AI revolution. Let's make this incredibly simple. Imagine a company called Acme Corporation. Acme wants to build an expensive AI data center. But it doesn't want billions of dollars of debt showing up on its own books. So instead, Acme creates a completely separate company. This new company exists for one purpose only: borrow the money, own the building, then lease everything back to Acme on paper. Acme gets to use the data center, but technically, the debt belongs to the separate company. It's a legal financial structure called a special purpose vehicle, or SPV. Think of it like this. Imagine someone else takes out the loan, buys the house, then rents it back to you. You're living inside it every day. But legally, the debt belongs to someone else. And that's exactly the financial machinery increasingly being used behind some of the world's biggest AI projects. Back in 2008, this kind of financial structure was mainly tied to the housing market. Today, it's powering something completely different: artificial intelligence. The world's biggest tech companies aren't just building smarter software. They're building enormous AI data centers filled with expensive chips, cooling systems, networking equipment, and massive amounts of electricity. These projects cost tens of billions of dollars each. No company, not even the richest ones, can endlessly pay for projects this large using only cash. So first, they spent their own money. For years, big tech used around 40 to 50 cents of every dollar they generated to reinvest back into their businesses. But AI changed everything. Now, some estimates suggest they're spending almost every dollar they earn just to keep up with the AI race. The cash reserves that once looked unlimited are being drained faster than ever before. Once their own cash wasn't enough, they turned to the bond market, and the borrowing exploded. The biggest AI companies issued bonds at a pace the market had never seen before. Within just a few years, annual borrowing multiplied several times over. Then it accelerated again. Even the world's deepest bond market started feeling the pressure. Think about that. The largest capital market on Earth was struggling to absorb the amount of money these companies wanted to borrow. That forced them to look somewhere else. And that's exactly where the hidden financing structures returned. Instead of placing every new project directly on their own balance sheets, companies increasingly relied on special purpose vehicles. These separate companies would raise billions of dollars, build the data centers, own the assets, and then lease them back. From the outside, everything looked normal. The AI company still operated the buildings, still filled them with their own engineers, still controlled the technology, but legally, a large portion of the debt belonged somewhere else. That's why so much of this financing doesn't immediately appear on the company's main balance sheet. It's not invisible because it's illegal. It's invisible because of how the accounting rules are written. One of the biggest examples involves Meta. A separate investment vehicle raised around $27 billion to finance a massive AI data center project. Meta helped develop the project. Meta will operate the facility. Meta will be the primary user. But most of the debt sits with the separate investment entity rather than directly on Meta's books. Investors providing the financing expect one thing in return: long-term lease payments. As long as Meta continues using the facility, the structure works. But it also shows just how dependent this system becomes on everything going according to plan. Now, you might be wondering, if investors know this, why would they still lend the money? Because these companies are some of the strongest businesses in the world. They generate enormous cash flows. They dominate their industries. And many investors believe AI will create trillions of dollars in future value. So from their perspective, backing companies like Meta, Microsoft, or Alphabet still feels like a relatively safe bet. But history has taught us something important. Financial systems often look safest right before people begin questioning their assumptions. Before we continue, if you're enjoying this breakdown and want more videos that explain complex financial stories in simple English, take a second to like this video and subscribe to the channel. It really helps us create more research-driven content like this. Now let's look at the biggest risk hiding beneath this entire AI boom. At first glance, this financing model looks brilliant. Companies get the infrastructure they need. Investors earn steady returns. And AI development keeps moving at full speed. Everybody wins. But here's the problem. This entire system depends on one huge assumption: that AI will generate enough money to justify all this spending. Because if it doesn't, everything becomes much harder. Remember, these projects aren't costing millions. They're costing hundreds of billions of dollars every year. Eventually, that money has to produce real profits, not just exciting headlines. When you step back, this entire AI boom rests on four major assumptions. First, AI revenue has to grow dramatically. Today's AI business is still much smaller than the amount being invested. If spending keeps rising faster than revenue, the financial pressure keeps building. Second, returns on these massive investments need to remain strong. Every new AI data center costs more money. Every new generation of chips becomes more expensive. If companies start earning less from each dollar they invest, the economics become much less attractive. Third, borrowing must remain available. As long as investors are willing to buy bonds and finance new projects, the machine keeps running. But if credit markets tighten or investors become more cautious, funding future AI expansion becomes much harder. And fourth, the physical infrastructure has to keep up. AI isn't just software. It needs electricity. It needs cooling. It needs land. It needs enormous data centers operating around the clock. Without enough power and infrastructure, even unlimited money can't solve the problem. Now, does this mean AI is about to collapse? Not at all. AI could absolutely transform the world. It could become one of the greatest technological revolutions in history. But history teaches us something important. Whenever an industry grows this quickly, using this much borrowed money, it's worth paying attention to how that growth is being financed. Because markets don't usually break when everyone sees the risk. They break when almost nobody is paying attention. And right now, most people are focused on AI models, new chatbots, and faster chips. Very few are looking at the financial plumbing making all of it possible. So let's go back to the question we asked at the beginning. How is the biggest AI build-out in history actually being paid for? First, companies used their own cash. Then, they borrowed heavily through the bond market. And when that wasn't enough, more financing began flowing through complex investment structures that keep large amounts of obligations away from the main balance sheet. None of this is necessarily illegal. Much of it follows existing accounting rules. But it does make one thing clear. The AI revolution isn't just a technology story anymore. It's also one of the biggest financial stories of our generation. And the next few years will determine whether this becomes one of history's greatest investments or one of its most expensive experiments. If you enjoyed this deep dive and want more videos that uncover the hidden stories behind business, finance, and technology, make sure to subscribe and turn on notifications so you never miss an upload. Also, let me know in the comments, do you think the AI boom is the next industrial revolution? Or are we watching the biggest financial gamble in modern history? Thanks for watching, and I'll see you in the next video.